Okay, so we earn over 1 million per year in dividends thanks to Yieldmax and ULTY in part. And now we have this reverse split news from Yieldmax, and I'm going to share with you how this impacts my early retirement with my dividends and Yieldmax. Okay, these dividends help me live financially free from a 9 to 5, and we're outperforming the markets in the process with Yieldmax and ULTY, and we're up 23% for the year. The SP is up 14% for the year. So no matter what others say about ULTY and about Yieldmax, we're still outperforming because we know how to use these funds properly. And now we have this reverse split, which is going to be huge. And I have 3 things to share with y'all on how this impacts my account going forward and how I'm going to maintain my early retirement. Okay. Again, we're up 23%. The Russell's up 7. The Nasdaq's up 18. So we're beating all the indexes, living financially free with our dividends using some margin, as you can see below, 867,000. And that's not even high margin leverage because 400,000 of that is short, including using Salty with ULTY. Okay, I'm so excited. All right, we've been pressing for this change with the Yieldmax reverse split. Okay, we've been pushing for this all over YouTube for years. People have been tearing us down saying reverse splits are idiotic and they're gonna, ruin your dividend, ruin your performance. But Yieldmax has been saying it themselves that it doesn't have any impact. And I've been saying it for years. I've been investing for 20 years and I've been through reverse splits before and nothing changed with my dividends. All that we got was a great benefit. And I'm going to share with you again 3 of these benefits and these implications going forward with my account. If you need help living financially free out of your brokerage account, email me for my e-guides at akintodd48@gmail.com or head to my website, Unconventional Wealth Ideas, where we're leading the FIRE movement, Financially Independent, Retire Early. You can learn all about what I do with Yieldmax and my e-guides here. Okay, when you buy my e-guides, you get my number and Discord access free for life. So I don't get paid by Yieldmax. I don't get paid by anyone. I just use Yieldmax's products just like I use a lot of other managers' products, and I just share what works with me. I don't give financial advice. I just live financially free from 9 to 5, and so do many of my members. And we use the dividends from Yieldmax to pay down our margin debt so fast that our margin debt is not a risk because, again, half of this is short, but then if we get over $1 million per year in dividends, then our margin debt is gone by the end of the year. And then our account grows by $1 million. That's what's so great about using margin. That's in a sideways market, of course. If we were to get $1 million in dividends from here in a sideways market, we'd be at $3 million in our account. So that's how I'm growing so fast. We started with YouTube, 3 years ago, and we got high 30% gains each year. We were up 50% in one of those years. So that's how I've gotten to over 2 million from where I started. And I use some loans, of course, because my dividends help qualify to the banks for loans. These dividends, help me live free, and the margin that I use to do it doesn't show up on a credit check. So this is how I'm able to maintain my life in debt, quote. It's not really debt. We're not worried about the margin interest here. We're not worried about the amount of margin because half of it is short. And we're not worried about the leverage itself because our dividends pay it back so fast thanks to ULTY. ULTY is our vehicle to pay down our income, pay down our margin debt with the income, all right? And then we use the other vehicles in our account to get our growth, all right? And we keep ULTY relatively small in my account. Yes, I have $400,000 invested in ULTY, but I also have $100,000 in Salty, so that's like 300 net. So really, that's only like a little over 10% of my account, 15% of my account. And if you're going with Russell and growth-related components in your account, I've always seen professionals use 20% max for Russell and small caps, and ULTY is small caps and high beta growth. That's how they get the high dividend. And so I try to keep it at, between 10 and 20%. That's why our performance is so high. Okay. That's why we're still up 23% for the year, beating all of the indexes, even Bitcoin itself. Everyone said Bitcoin was going to be the only winner and why go with anything else? And look at how their comments have aged now. Okay. They didn't age too well, did they? Bitcoin's been going through a lot of trouble. And so we're going to get into that a little bit because ULTY is comprised of some Bitcoin plays. But the first thing that this does to help benefit our account is it keeps our maintenance at 50%. If ULTY had dropped below the $3 threshold, which is standard at many brokers, we would have gotten our maintenance risen to 100%. Many people would have been in margin calls, even if they don't use margin. That's just the power of equity and how it works, okay? And I've been pushing with Yieldmax. All my members, we have a 3,000, member community at Discord. We're all clamoring for this change, okay? I was talking with Yieldmax. We went on Spaces, on X, every Wednesday for a while there, and I was pushing this narrative. They told me there would be no reverse split, and then we pushed for this change. I had to quit that show immediately on X, okay? Thanks to Wolf. I love Wolf, Wolf Research, and those are some great guys. And then I went and made this video, and then I told y'all about the reverse split and how it's going to, destroy us if we don't get the reverse split. Of course, it wouldn't destroy us because we didn't keep enough in ULTY anyway, of course. But with YouTube channels, high income, I don't know of another channel that is actually living it like us, okay? And we have a large community, and so we're pushing this, and then other YouTube channels follow. But then other YouTube channels, it's like an echo chamber. They seem to push the wrong narrative, saying that reverse splits hurt you, and the erosion on ULTY is terrible. Look at this 1-year chart, or look at how the maintenance is going to go to 100%. It's going to ruin a lot of people. That is true. They finally figured that out. But they thought reverse splits would change your yield. They thought that the erosion on ULTY was just too bad. It's just going too low. And if they reverse split and go higher, it's going to fall even more. These are all misnomers and completely ridiculous notions, okay? This is, clearly a sign that there are many amateurs on YouTube who don't even have an investor's mind frame. I've been investing for 20 years. I was talking with my dad about this. We went through the AMSA split, a couple years ago during Corona, and we've been through many other splits before. All it did was lower our maintenance back to 30%. So with ULTY, it would go to 100 if we didn't get the split. But now it's going to stay at 50. Most likely, we never know. Brokerages can change maintenance, so you want to make sure you're always managing your position sizes anyway. But now we're going to get lower maintenance to stay here, it looks like. And so that is key because that's going to preserve our available withdrawal. If you need help understanding maintenance, see my Volume 3 e-guide on how to use margin to live free out of your brokerage account. So look at our account here. We have 381 available withdrawal. Our account is 2 million, but our available withdrawal is around, let's just call it 400 for rounding. Why has it gotten so much lower? Because I'm using a lot of short, and a lot of shorts are 100% maintenance in many cases. So this is why my available withdrawal has dropped. And so now we're going to keep our available withdrawal high. We can withstand over 20% corrections. It doesn't even matter. I used to say that all the time. We can withstand over 20% corrections and not get a margin call. But now it's all about delevering, which we'll talk about a little bit later in this video. I use put options to hedge. I have all these vehicles so that I don't actually ever reach a margin call, yet my available withdrawal stays high enough to where I can withdraw and pay my bills. All of my bills are automated out of my E-Trade account. Okay, and that's how this FIRE lifestyle works. We take our dividends, they qualify to banks for loans, they don't show up on a credit check as debt, and then they actually pay our bills, and then even if we have a market fall, we keep our dividends high. As you can see, we're still over $1 million in income, and then we're still able to withdraw out of our account without getting close to a margin call. And that's why this reverse split is so important, because we're going to get our maintenance to go to 100%. Now it's going to stay at 50. That's the first thing that's so key. We keep our available withdrawal. All right, the second thing that's key with this announcement, okay, is that we're allowed to buy on dips now, whatever we want, and we can buy with the peace of mind knowing that we have enough available withdrawal to do this, okay? So if our available withdrawal is gone because of, ULTY had a maintenance change, we wouldn't be able to buy any dips. We'd be, we'd have zero flexibility. Now we have the flexibility to buy things. And so we've been delevering out of Bitcoin and small caps. Okay, where's the Bitcoin chart I have here? Here's the chart. We had a nasty breakdown below the 200-day moving average. If you're watching my video last week, you would have seen that I said, hey, look, we're setting up for a nice bounce in the markets. And we did have a nice bounce on Monday. The S&P was on the 50 and Bitcoin was right below the 200-day moving average. But I said, hey, and a lot of people were saying, hey, we don't need to listen to your video because we know Bitcoin's pumping after hours and we're, all systems go here. Everything is looking good now for Bitcoin. But look, we broke down below the 200, had a nasty downtrend that we're in now. And, that really hurt a lot of investors last week. People were calling me left and right who were margin called. People who were not my members. People who were just buying my consultations on my website to try to figure out how to get out of their pickle with Misty and Bitcoin and Robinhood and Blocks and WPay and all these other funds that are leveraged or ULTY, that are leveraged. even ULTY, they put way too much in ULTY. And they bought high, they bought up here instead of buying low. You buy low and you sell high, of course. And so many people were complaining about ULTY when GBTC has fallen 25% or so from the highs. So has ULTY, and ULTY's actually performed quite well. And, you know, Bitcoin is a big part of ULTY, as y'all know. So if ULTY is, you know, Bitcoin related and small cap related, don't you think it's supposed to fall if, you know, it's comprised of Bitcoin? And yet it's actually held up quite well. I mean, we've been talking all about this, you know, my members and I, you know, I think we're up like 1% for the year still in ULTY. I don't know. It's not exact math, but, you know, we've had a big pullback and ULTY is actually hanging in there when you factor back in dividends, okay? If you're just looking at a chart of ULTY, it looks pretty dire, okay? But that's not what you look at, okay? You do not look at a chart of ULTY. Look at this chart. You have to factor back in dividends. All right, this is what I always say, okay? This is why Cornerstone's one of our biggest holdings. It's what I always start out with on my channel. Cornerstone's a 4-star fund. And, you know, there's a reason it looks bad on its chart. It goes down like ULTY, but it's 4-star on Morningstar, okay? And, you know, it moved upper left or right on its chart. I'm sweating so bad because I'm breaking a cold, okay? Last week was so intense for me, not the market itself, but just dealing with so many clients, you know, so many, you know, members, making so many videos. It was easy for me to delever and get out of this market downturn and stay with our outperformance. It was not easy to be just dealing with all the phone calls. So, you know, I'm trying to see if I can even make my team session tomorrow night. But I have to get this news out because this is huge. This changes our way of life. So look at Cornerstone. It moves upper left or right on its chart. ULTY would do the same thing, but Cornerstone's 4-star rated. So, you know, how do you think that Cornerstone's a bad fund? And the same example applies to ULTY. Am I repeating the same information because I bring up Cornerstone? No, but I will say that Cornerstone is what we have been delevering into. We've been delevering into the triple C's as always. We've been buying Cornerstone, but Cornerstone's been holding up. You know, it's been holding up very well. Look at this chart. Year to date, it's been holding up. Okay, so the market's been going down. It's been going sideways, Cornerstone. Some members have said that Cornerstone's like, you know, not doing too hot. The market has been pulling back and Cornerstone has been going sideways. So we've been hiding out here in Cornerstone for the, you know, the past, you know, few months. I've been here for years, of course. Cornerstone's been going sideways. Even the S&P is going sideways. Look, the market is always changing. So I'm always going to have the same foundation. I'm always going to have the same principles, but I'm going to have counters. And if you're not listening close enough in these videos, then you're going to be hurt. Okay. You're going to pay the cost. And so I've been buying the S&P. We've been delevering into the triples and the C's and the doubles. Okay. I've been buying the doubles and the triples, and then I've been hedging at the same time. So that way we have pretty much minimal downside going forward because of the way we're hedged. You know, we went 3-to-1 from singles to triples, and then we went 2-to-1 triples to triple shorts. And so now we're strangled. If we go higher, we're going to make millions of dollars over the, you know, the next 10 years, because if you put 10,000 in one of these triples, go look at Morningstar, it made you 300,000 over 10 years. We've showed that in past videos. Go check that out. But you can only lose 10,000 if we fall. So the way we're strangled with our triples, all right, and go see my past videos or see volume 7 if you don't understand. It's not about buying the triples. It's how you everyone should know what triples are, by the way. Everyone should know triple leverage ETFs. And they're actually great funds. They've outperformed everything in the over the last 10 years. They've outperformed the S&P. They've outperformed the NASDAQ. But it's the way we delever into them that actually made us drop our margin debt, raise our available for withdrawal, and then raise our ability to get capital gains on the way back up. Because we know we're not going to get capital gains with ULTY, but we're going to get capital gains on the way back up with things like the triples, and we have the C's like Cornerstone. Both of those compound on the way back up. Okay, but with Cornerstone, obviously you play it properly around the rights offering. So it compounds, but then it has rights offerings. And so this is what we alert of on Discord. Okay, when you buy my e-guides, you get Discord free for life, where we alert you of the Cornerstone rights offering announcement. And so this gave us the time to buy and sell Cornerstone. The market does not tell you when to buy and sell, but Cornerstone does tell you when to buy and sell, because if you play it properly around the rights offerings, just like with any closed-end fund, that's how we've made all of our money. That's how I went from 15,000 after Corona to $1 million. It was with the triple C's, and it was playing Cornerstone properly for one. It's about how you delever into the triples, which again I talk about in volume 7. It's too much to explain in this video. And then that way we get much better bounce back potential with compounding. And then when you play Cornerstone and other closed-end funds like Cornerstone properly around their rights offerings, we sold right here at this high, and then we bought right here at these lows. All right, thanks to the announcement, and thanks to also how we play Cornerstone. We know how to play Cornerstone. We know how to time it around its premium thresholds, which are in my volume 4 e-guide. So we're hiding out in Cornerstone. We're delevering into the triples and doubles, and we're delivering away from Bitcoin and small caps, and we're keeping small caps, our only small cap exposure, with ULTY. Okay, we used to have all these other small caps. We used to have, RDTE, ULTY, a lot of Bitcoin names, a lot of high beta names like Robinhood, Palantir. We still own those names, but we keep them so small they don't affect us, whereas everyone else is getting creamed in their accounts. All right, and yet we're in ULTY, we're not getting creamed at all because it's down with small caps. We understand that, and I'm hedged with salty. And then when you factor back in dividends, you're actually doing okay in ULTY. Okay, let's go look at a total returns of ULTY right now. Since inception, it's up 14%. Okay, since inception. So it looks bad on the chart, but you have to factor back in dividends, and you have to drip it on dips. And you have to delever away from other small caps, okay? You can't have ULTY and all these other small caps with it and all these other high beta plays with it. That's how you're going to get burned in a down market. And the market has barely even pulled back. Imagine a true market pullback, okay? Imagine, the market is on the 50 right now and it's looking attractive. And it bounced last time we had a tag of the 50, and that's what we commented on last video. So we had this tag of the 50 last video, and then we had the bounce. So we made a lot of money. We made $50,000 that subsequent day after making my YouTube video, which no one wanted to watch, no one wants to pay attention to. They think I'm repeating things, and they're not listening to me. They're watching other YouTube channels, and they're sitting here not watching every part of my video. They're just saying ULTY. They look at a chart, they say it sucks, when you should look at the market itself. Okay, look at the market, and we've been delevering away from those small caps, going into the triples, lowering our margin. Why is my margin higher? Because, again, we've been adding shorts. We have 400,000 short. All right, so we had this bounce, and then I saw that, when we had this one down day, we had this bounce, right? But with GBTC, we had a breakdown at the same time. And I've been telling everyone, Bitcoin and small caps are a proxy for risk on sentiment. So when these things break down, look out for all high beta risk on names. They're going to fall with it. The market could go higher, and these other names like Palantir and stuff will pull back, even though they're in the indexes, okay? So you have to be listening to me, all right? I say the same thing every time because it's the same investing principles that see me through every year for the last 20 years. I've been buying the triples for 10 years. I've been buying the Cs for over 5 years now. So this is how we do it, okay? At the highs, we recognize that the market has barely pulled back, yet all of our risky small cap names are really pulling back. So that was my cue to delever into the triples, into the doubles, and then also the Cs, of course. And the Cs also, by the way, they've been dripping at the lows for us, whereas ULTY's drip does not drip at the lows. That just drips at market prices. We're dripping Cornerstone for a 19% gain every month on top of the 20% dividend. That's what's so great about Cornerstone, and that's why it's a 4-star fund. No other fund in the world drips its dividends down at the NAV like that, all right? And so we're buying the bottom of the market every time we get a dividend in Cornerstone. It's helping boost our performance, all right? And then with ULTY, yes, it's been falling some. I'm not going to lie. ULTY's been falling, but it's not because it's been ULTY that's been falling. It's because of the holdings within ULTY, of course. If you go look at the ULTY holdings right here, you're going to see the top 10 holdings: Coinbase, Palantir, CoreWeave. CoreWeave's, been, getting hit pretty hard. All right, we've been adding Salesforce to our portfolio. It's funny that they have these names in here now. Look at the quality. A lot of my members were remarking on the higher quality names now within ULTY. Look at this. We have Meta. We have Robinhood, Coinbase. These are S&P names. Palantir, it's a top 12 in the NASDAQ. We have NVIDIA, Salesforce, a top 10 in the NASDAQ as well, the NASDAQ 100. So, and I just know these sector ETFs, and I know the holdings, and that's how we get our performance, because we keep delevering into the high quality areas, the high quality hold ETFs and the high weighted stocks in the indexes. All right, so it's hard to lose when you go there. Okay, and ULTY, it looks like they have a balance now of high beta growth, high beta, small cap growth, and large cap high beta growth. So this is actually very encouraging, and I agree with my members there that the top 10 holdings for ULTY, are a good sign of a bounce back going forward. So if the market bounces back, you're going to see ULTY really have a nice comeback for a little bit. It's never going to get back to its old highs. Members always ask me, not necessarily my members, but just YouTube, viewers are like, hey, will ULTY ever get back to the old highs? Probably not. Not unless we had some huge market run. It's not supposed to go back to the old highs. Same for Misty. All right. It's not supposed to go back to the old highs. All right. Now we also have a reverse split for many other names. It's not just ULTY. Okay. We have a split coming from other funds. All right, and I have, my members are the ones who told me about this. I know we're pushing for change first here at my channel because we're really living this. We're really doing this. We needed this reverse split, and now that we got it, it looks like we have even more reverse splits coming. It looks like we have Tesla, Nvidia, Coinbase, which is great. Okay, we have the YBit. It looks like Yieldmax Bitcoin option. We have Moderna, Tesla again, and XYZ, and everyone was saying. And it looks like Airbnb, AI, and so everyone was saying that Tesla did so bad during its reverse split. Todd, the reverse splits don't work. Look at what Tesla did. Well, look at what Tesla did. Okay, look at what Tesla did, but look at what Tesla did. During the time of the reverse split, Tesla was going down. That's all that it was. I can't believe that members actually thought that the reverse split doesn't work because it was going down after the reverse split. This is the ETF that we're talking about, not the holding underneath, not the underlying holding. Reverse splits affect stocks. They don't affect ETFs the same way. It's almost a non-event. So, Tesla was falling because Tesla was falling. Y'all should be ashamed of yourselves for being so, I'm sorry, like so behind the times. I don't want to be rude, but y'all have been so rude to me, right? And not watching my videos because y'all think they're repetitive and y'all think that I'm wrong. And the fact that if I own ULTY and these other funds, they go down on the chart. Again, that's just something y'all should be ashamed of. If you're watching this now, my members know, they know better. But if you're watching this now and you're not a member and you haven't bought my e-guides, you don't understand, or maybe you never went to school for finance or something like that. Like I have a BA in finance, but that's not what helped me. It's just real life experience. Y'all should be ashamed. Okay. Seriously. ULTY has been falling and that's not even, what the true returns are if you factor back in dividends. The splits don't affect anything. They only affect the stock, not the ETF wrapper. All right, how do y'all not know that? You know what I mean? And we've been saying that for years here now, and I still get the same pushback. I'll tell you right now to your face, that you're wrong, and Yieldmax said that they don't affect anything. I've said in my own experience they haven't affected anything. So why would you go against what we said? We got it straight from the horse's mouth with Yieldmax. Why would you go against the professionals, like Yieldmax? And then believe yourself or believe other YouTube channels with some, person who's never traded himself out of any type of real situation. Okay. These investors these YouTubers are not true investors. They're tourists. They're not real investors. They're not built for this. Okay. I've been doing this for 20 years. All right. This is what I do. Okay. And so I can't believe I have to fight the ignorance when it's coming. You could just Google reverse split. Does it affect an ETF? No. Does it affect the dividend yield? No. Will it change the dollars and cents given to you? Yes. Will it change the overall percentage? No. So, I mean, you guys and gals who've been, pushing this narrative of, broke investing techniques, okay? Y'all need to, have some sort of repentance, okay? That's what we used to push here early on. Repentance in the Bible means radical change of mind, okay? Repentance. Okay, you need to stop looking at these charts and saying that they're going down. You need to factor back in dividends. Come on. All right, and then you need to stop saying that a reverse split affects something. It does not affect anything. Did you hear it from my mouth or from Yieldmax's mouth? Okay, so I've beat this dead horse enough, but what can I say? I know my members support me. I see y'all here and I love y'all so much. Okay. I can't wait to get into this discussion with y'all. I had to make this members only comments because I would get so many ignorant messages in here. Y'all are just watching other YouTube channels and, you're not staying indexed and, Cornerstone is the way to stay indexed. The triple C's are indexed and they've been holding up. Okay. I don't care what you say about the leverage being risky for triples. We buy smaller amounts. We watch our position sizes. So there's not really a risk. Would you rather lose 100,000 in SPY on a 50% crash or would you rather lose 100% of 30,000 in a triple, okay, which you wouldn't even lose the whole 100% because obviously it wouldn't go to zero. So you lose way less money in the triples. You make way more money, the same amount of money on the way back up, if not more, in the triples, and then we can hedge it out cleanly with our triple shorts. And so now I would just say I just explained to you the whole process. But if you don't get that, then go check out volume 7. And if you don't understand Cornerstone, check out volume 4. That's where we're hiding out. That's where we're dripping our dividends. And then also I would just say, when we sell our options, that's the other thing. I've been closing out some of my options for, nice gains. Okay. You see the blue chip stocks that I had there, but the blue chip stocks, those help just balance our portfolio out. You saw waste management, all those Bitcoin, not Bitcoin, I'm sorry, those blue chip plays. We have about 150,000 of those. They were up during the recent downturn. We did that every year. We rotate in cycles. The market moves in cycles. Sometimes it's small caps. Sometimes it's value. Sometimes it's growth. Sometimes it's everything. So we've been rotating out at the right times into those blue chips. And then also we've closed some of our puts for more gains. The only ones you see here, are the ones that are just, we're down temporarily in these. But if we just let time go by, we don't need these stocks to go back up. We just need the time to go by, and we're going to still get all of our premiums from selling our puts, lowering our volatility in the process, and lowering our margin as well, lowering our risk, lowering our volatility, lowering our margin, increasing our performance, and we're just selling time. Okay, we're not doing zero DT like everyone else and piling into zero DT and getting into some sort of risky margin call scenario. We're actually playing Bitcoin safely through puts. Okay, Warren Buffett used puts to get ahead. He sells puts on Coca-Cola. He's one of the more conservative investors. That's what I do too. I follow his lead, and I do it in ways that we can play ULTY and BitX, but through the sold puts here. And we actually collected 50,000 in premiums right up front just for selling these. They lowered our volatility as well, and they lowered our margin in the process, which lowers our interest. If you need help selling puts, that's in volume 6. So that's all I can say. This is what we're doing. You should sell puts, to help, offset your lag in your account. Okay. Puts give you more performance. Okay. And we do it this way, so it's safe. Okay. And I just explained to you how to do it. And if you don't know how to do it, see volume 6. I get so much hate on YouTube for being repetitive, but isn't every professional repetitive? Go look at Kobe Bryant or Michael Jordan. They do the same things. They prepare the same way every day, but then they use certain counters depending on what the defense gives them. I use certain counters depending on what the market gives me. And that's all in my e-guides. I've shared with you all of my experience over the last 20 years, but then they go watch other YouTube videos and they're swayed terribly by the ignorance surrounding reverse splits and the ULTY NAV erosion. You're all wrong. All of y'all, you're all wrong. ULTY's been doing well since inception. I just showed you the results here. I just showed you the returns. Don't buy high and then sell low. Buy low and sell high. I know so many people who are like, I sold out of my ULTY. Why? ULTY I've been buying more of. I sold out of my other small cap names because they don't give me the same yield. They're falling by the amount of small caps. They're going to burn you. So I just delevered into the high quality names like I told you. I delevered into the triples and the doubles and the C's. All right. And then I kept building more ULTY because ULTY is our snowball compounding machine to lower our margin fast, okay, with relatively low maintenance. And then when we lower our margin, we're able to buy these high quality assets again, and get away from the decay and the erosion, which isn't really decay and erosion. You factor back in dividends, but they do fall hard. A lot of things that Yieldmax and Roundhill and Rec shares are based on high volatility on purpose because they need to give you the dividends. They need to be high dividends, so it needs to be high volatility. That's what y'all are so attracted to. But you have to understand those same things fall huge in a down market, and we haven't even had a down market yet. Imagine a true down market where the S&P breaks the 50 and goes lower, okay, and we have a 10, 20% correction. What are your small caps going to look like? They're going to fall 30, 40, 50%, okay? So we're already out of them, okay? And going forward, we can't even really get hurt, in my opinion, because we're just going to go with the indexes entirely now. And then we just use ULTY. Yes, we have Yieldmax and other things, but they're small. They're much smaller than they used to be. And we just use ULTY. Now with the reverse split news, I can safely buy more ULTY and not worry about over concentrating myself and raising my margin, my maintenance, because if you over concentrate in ULTY, then you're going to raise your maintenance, of course. So it'll be either from a lack of reverse split or from just you being over concentrated in ULTY that you could get a maintenance change. All right, so we're not going to ever get caught with those, with those kinds of traps. We don't put enough in ULTY to matter, but I'm buying more ULTY, selling all the other small cap related things out there. Yes, there are some new competitors to ULTY, and we'll talk about that in the next video. We've been buying some of those as well, but ULTY remains my favorite because I can hedge it with Salty, and they have protected positions on all of their positions. And now look at the quality once again, the high quality names that they have in their portfolio. All right, I'm really looking forward to the bounce back potential we could see in ULTY if the market were to bounce back, okay? So if you need more help doing what I'm doing, living financially free from a 9-to-5, outperforming the markets in the process while collecting over $1 million per year in dividends, email me for my e-guides at akintodd48@gmail.com or head to my website, Unconventional Wealth Ideas, where we're leading the FIRE movement. You can see all about my testimonials here. We have, over 100 testimonials here, and I have so many more to put in. My members are also supportive because when they actually read my e-guides and then, follow my portfolio and my trade alerts, they're actually, they perform in line with me. Some are even doing better than me. And so they're very thankful to me. It's the people who just watch my YouTube videos, who don't read my e-guides or don't watch my videos in depth, who are all getting hurt. And then they're just following other YouTube channels, and it's blind leading the blind, okay?